European stocks rose and futures are unchanged on Wall Street as German and Chinese manufacturing data suggested Europe's debt crisis is stalling growth. I'm Taylor Schrontz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Mallinger with The Street, and together we bring you the morning call. Scott, we had some very impressive action yesterday. It's been a really wild week, and it's tough for traders to really get involved with this market because it's been really unconstructive action. Going into a holiday weekend, let's review this week's action and how we're going to position ourselves because we have Monday off.
Exactly. So this week I think traders actually were pleased because you had tactical follow through. If you remember Monday, we had that oversold bounce into Tuesday. Then Tuesday, you had that late afternoon reversal. So a lot of guys who were looking to short the bounce shorted 1325 to 1328, and then we reversed Tuesday. And what did we do on Wednesday? We opened lower. You got paid if you traded for follow through to the downside. Then yesterday we talked about 1291 to 1295 as key support. We went down there by mid-afternoon, started to reverse. Guys started to position long. And if you took those longs overnight or a portion of them, we're up a little bit today, you're positioned well and you're making money getting follow through. So as a short-term tactical trader, all you can ask for is follow through. Now the question is on a macro basis, can we continue and break this lower level and get to higher resistance zones?
So going into a holiday weekend, because this is a market that we haven't typically traded before, there's just so much unconstructive action. Are you going to set yourself up like you traditionally do, or are you going to treat this a little bit different?
I think, some guys will be risk averse, and if we continue to bounce today into tomorrow and we get to some of those resistance areas, just take the trade and don't worry about it over the weekend. Enjoy yourself. I know for me, I have a plan. I started to buy into yesterday's weakness, and I've also, I bought like Apple and some others earlier. But if you look at the chart here, this is what I was watching. Here is that head and shoulders top, the left shoulder, the head, the right shoulder, measured move. So it was prudent to start writing down this area. This was at 1291 low. Then we bounced off this on Tuesday, then you had that mini reversal, and then yesterday we held again. So the question is, can you actually buy strength? Can we get above this 1325 and perhaps see a move to test this other area, which is around 1345? So right now I think traders are going to be positioned here looking for relative strength. We get above this. I do think that this is doable. Maybe it'll be today, maybe it'll be tomorrow, maybe if nothing crazy happens over the Memorial Day weekend.
And at the SPYs, we're taking a look at that 133 level because we have a lot of guys involved in that particular product.
Yeah, so let's just look at the SPYs real quickly because I'm not long the spiders, but I covered them yesterday. If you look here, that's what you're talking about. Nice lower pivot. We're opening a little bit above yesterday's high of 32.46. So if it starts getting above Tuesday's high of 31.33.23, you're going to see some more shorts cover, and you can see a nice little move to 134.54. Or so. That's basically the zone. That's the ABC play within there, and I think you could be long some if we get some follow through, take some off, but trail some.
Moving along to the sector spotlight, we're going to look at some key themes in the market. Clearly, one of those has been the euro. One day Greece is going to be part of the euro. One day it's not going to be. There's a lot of headline risk going on there. We have to take a look at the FXE and, of course, the inverse, the UUP, because there was some really interesting action in the dollar. I mean, 14 days up. I believe it was exactly 14 trading days. Some really impressive action in both those ETFs.
Well, as a trader, you need gauges, you need indicators. So everyone's been watching the euro. Guys have been trading the FXC. So I have the FXC up so I could see what type of movement we get. If the FXC drops huge, if the euro drops a lot, does the market usually go down with it, which it has because the dollar goes up. But sometimes if it's dropped and all of a sudden the market holds in there, that we're a little bit stronger than we have been. So if you look at the chart of the FXC, you'll see it's really hard to be crazy short the euro right now after this last calculated move. This was a high, lower high, another lower high. This is when the floor broke. This is when a lot of people laced into these shorts, 129.65, and then you had a nice move lower. So at this point, you have a new point of reference. You have 124.83. So 124.83, if you take a bigger look here just on the daily, where we came from all the way down here, there's been pressure there, and granted it hasn't fallen apart, but from the highs here of 148 down to 125.39, that's why you have some nervous shorts, because it does seem like if they come out with something crazy, whether it's the Eurobond, whether it's the FDIC insurance, you could get a rally there. So you don't need to stay till the end of whether, if you want to stay short, you don't need to get everything out of it, take trades.
Right. Moving along to uncharted territory within the markets, because again, these are markets that we haven't typically traded throughout our careers. We have to take a look at GLD, the gold ETF. Typically, gold and stocks move the inverse of each other, but we've been seeing them move in tandem, which is really an interesting phenomenon in terms of the overall market.
Yes, and a lot of people are very disappointed. They thought they could be safe in gold.
Right.
They thought they could just buy it. So if European problems persist, they could be, they could just be involved, be long. But technically, it's been broken. It's told a different story. So if you look at the GLD, you'll see, ever since this peak right around here, which was on, September 6th, it's been in a downtrend that started to get juiced. I think a few months back in February when the Fed, came out with their statements, and this is when it increased this intermediate downtrend, which was also intact. So now, where are we? We bounced yesterday off of this area, this GLD 148.60. It served as another support, as actually a triple bottom. And typically, you never see a triple bottom because they don't typically hold. So the question is, you have this lower range now, so some might trade for a bounce. But at this particular point, you have your resistance here, which is about 155. And if you can't get back above 154, 155, you go to the monthly chart. And if you look at the monthly chart of GLD, you will see that we broke this accelerated uptrend, and now we're holding this area. But if we start to break below 148.60, you could easily see a move down to 140.
Right. It's really amazing how the charts look exactly just like the SPY does. Moving along to another volatile ETF, the GDX, which is the gold miners. These names are really tough to invest in individually. You have a lot of volatility in these names because of the geopolitical risk involved. But this has had some pretty impressive action as well.
Well, if you look, you'll see that the GLD was at those lows and the GDX held higher. So you have a divergence that the gold miners are actually acting a bit better. I don't like to trade them or invest because they always have some potholes. But as a trade, a lot of guys were buying the miners yesterday saying you can't argue with the daily strength. So if you look here at the chart, you will see where the GLD was at the lows, going across. This one is now a few days off the lows, and it actually even powered through to close above this pivot. So that's showing you that maybe you could be long some of these miners. I know some positive reports came out on Newmont. I think some people like RGLD and even GOLD. So if you look here too, it's coming into an area that could be a little bit of actually a poke through yesterday.
Right.
So at this point, there's some room to about 48. Some of those stocks acted well. I'm just going to show you one. You look at Newmont here. It's been crushed. So if you want to trade something in the doghouse, this actually held higher, closed on its highs. Perhaps it gets a move to like 54, and that's all you're getting in this type of market. You need to look where it came from, where it can go, and then map out certain areas.
I recently interviewed the CEO of Randgold. We were just talking about that before, ticker GOLD, and he's really, really bullish on the business right now. Moving along, we are going to jump into a quick commercial, and when we come back, Scott and I dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to dive into the trenches and look at stocks above their 100-day moving average. And to switch it up a bit, we're going to talk about Apple in this segment, not quick hits. Scott, you had a great call on Off the Charts with Cramer. Let's review the action you're looking at.
Well, everyone says you can't time Apple. I know it's been a great investment vehicle, but traders time it every day. It always tells you something if you listen to it.
Minutes a minute, you could trade this thing.
Yeah, and you can get paid if you do it the right way on any time frame. So, there are a lot of sell signals that we went over in his show, and then finally we saw a buy signal. If you look at the chart here of Apple, this was that outside day that we went over right around 644. If you remember, S&P's rallied 30 handles. This couldn't rally. That gave us a signal we were going to go lower. Then you had the earnings gap. Another signal of pressure because it didn't hold like it held back down here. And then finally it held the 100-day. So on this day, I remember buying it. I'm like, I'm going to try it for a swing account around 537 when it got above this pivot. And then on the show, we talked about whether or not it could hold higher, whether or not it could show leadership, whether or not it could actually flex its muscles and take the market with it. So now for today, look at this 573.88. You know how I play momentum. It trades through. Sometimes it trades through, and then if you do, you can see a cash flow trade for it to fill this gap up to about 580, and that might be for a short-term trader or a short-term quick trade. But if we could close above that 575, I see no reason why it can't continue to lead the market, which would breed some confidence. And then the next real level is up to about almost 600, to fill another gap, which is right around 650. So there are two levels to watch, two different types of trade. I'm going to hold my swing stock and stay with it as long as it acts well and holds higher. And then I'm also going to trade it for cash flow, which is what I do for a living.
Moving along to Visa, ticker V. The strength of the consumer has really been the story for Q1 of 2012 and moving into Q2. That's why names like Visa and MasterCard have performed well. So do you think this can continue on that trend?
Well, this stock also held the 100-day. A lot of the stocks that held the 100-day while the indices went below it still deserve your macro attention. So it all depends on your time frame. And there are guys that actually time this both ways, short and long, and you could do that by using charts. And we've talked about the different strategies here. If you look at Visa, you'll see here is that small push-through failure. So from a small tactical area or just a short-term trade, right there was your sell signal. Some guys probably even got short right there. Then once we broke this area, they added to it. So that low was 120.67. Then again, when we broke this ascending channel. So I remember talking about this in here. I said below 115, we could see the 100-day. So you had a cover on the 100-day. And then if you tactically bought it, we're right back here. And now overall, you take a quick look at the macro. Stand to this, if you've been an investor in Visa, you have nothing to worry about. It's above the 200-day, it's holding the 100-day. But as a tactical trader, there's been a lot of nice trades along the way.
Speaking of investor, moving along to another retail name that's performed really, really well, Lulu. In addition to looking at the fundamentals and technicals, another thing that I go to are my retail channel checks. Every major analyst on the street does this. So I go to like my Brian Sazi over at Real Money Pro or Lauren Sebastian, who's a celebrity blogger. They go into these stores and they could talk to you about spending trends. We've had great calls on Lulu with T3 and Options Profits because of looking at these little incremental data points.
So they look at the incremental small data points, and
Right.
I look at some small incremental trades.
Right.
Because you could do both.
And
You
it's
could be
worked out well.
Yeah, so it's just combining all worlds. So when you combine all the worlds, you get power. That's the same way when you combine time frames. And as an investor in Lulu, you're doing great. As a tactical trader, there are ways to maneuver. So if you look here at Lulu, you'll see that last time it tried to break out, it failed. That was a sell signal for short-term guys looking for momentum. Then once it broke below this support, it didn't give you much, but you had yourself a nice trade. I remember guys in my office were shorting it through 70, 50, and then they're like, okay, let's cover around the 100-day. So they covered, made a nice trade, and then if you sold into this failure, you had the luxury of buying back the 100-day. Now it's right back in, just like Visa. You know, no real damage here. Didn't break any macro trends. If you're a macro investor, stock picker, you stay the course. As a trader, there are tradable ranges, and right now let's see if it can continue to show some leadership because it closed strong yesterday, and you'll see some resistance around 75. So we'll see if we can get there today.
It's just amazing what it's doing in the industry. $6 billion yoga industry, and they're generating $1 billion in revenue. It's just an impressive stock in my mind. Moving along, clearly the ladies are whipping out American Express to pay for their Lulu products. Let's take a look at that name.
Yeah, well, this one has been impressive. It's still above the 100-day, just like, not like the financials, but just like other strong stocks. And I know Stephanie was actually talking about buying this one on the dip, and I think it reached her zone, so congratulations on a good tactic here.
Yeah, she's been doing great with the financials, really well.
Well, she's in the regionals versus the bigger ones, and then if you look at American Express, she sold some into strength, and you look here, you know, not to keep talking about her tactics, we were talking about the 100-day, and it didn't even get there. Look how I said, you know, this was the prior breakout, went all the way to the highs, you know, it then got pressured with the rest of the market, so some short-term traders would have sold 60, and then you come back in and you buy the prior breakout right around here. So it held. This is your new point of reference. Question is, you know, can it continue again? So this is the little box that let's move this over, American Express is in. I think you got some room for a trade back to this area of about, you know, 57 and a quarter, and then maybe even a little bit higher into the 57s. But overall, very tactical here, and it's still acting well for guys that are holding a little bit longer term.
All right, moving along to quick hits for some quick cash. We're going to take a look at Google, and if this name has not been in the news along with the Zynga and Facebooks of the world, I don't know what is. But if you had to pick a Google or a Facebook, I think I'd go with the Google.
Yes, they do make a little bit more money, and they're a little bit more proven. And yesterday, it proved itself one more time that it could hold the 200-day. I was getting a little scared yesterday. I was like, you know what? Because a lot of people beating me up that this is my stock of the year and it's done nothing so far. So it's fine. We trade real-time, things change, and right now it hasn't performed. But what it is doing is it's holding its 200-day. So as long as stocks hold their 200-day, I think they deserve your longer-term, attention. And if they break them, we revisit. So right now, if you look at the chart of Google, you will see that here is the 200-day moving average. This was the last, this was the last time it broke out. This is actually when I liked it technically, gave you a nice move, and then came back too quickly. P.S. Earnings came in, traveled all the way back up. Earnings disappointing, but look what it did. It held the 200-day there, held the 200-day there, still holding the 200-day. I think for a trade, guys today will be looking if it can pop back up above this 615. If it can get above 615, perhaps it negates some of the weakness from the day Facebook came out. So at this point, long-term traders keep trading at verse 590. Short-term guys, you're probably getting chopped up, so you can either avoid or just be very tactical.
All right, moving along to Las Vegas Sands. If I'm going to take a gamble on anything, it's going to be you trading the casino names. I just love the way you trade Las Vegas Sands and Wynn for that matter.
Yeah, well, Las Vegas Sands gave you a sell signal a few different times, and now it's trying to get a pivot low. So it did a red dog reversal the other day for your assistant.
And a couple of dead cat bounces. This is for you, Andrew.
This is for Andrew because he gets very amused with the names, but these names stick and they work. If you go back to the chart here, this is how you stay safe. If you look on this day with Las Vegas Sands, finally after getting crushed, okay, it traded below this low here, so this is how you stay with something or you reposition. Went below the low of 46.15 and as low as 45.66. So this was your buy entry. And now you trade versus for a pivot. So if you want to look a little bit closer, I did get long yesterday. Now the question is, can it break this small little downtrend? It tried this week and couldn't and failed, so it retested. Now I'm long some, and I think I'm going to try and add above 49.30. If it can get above and stay above 49.30 for like 16 minutes to show commitment, I do think we can get some type of cash flow trade back to the 51.25 range. So we'll see if we can maneuver this type of trade. I'm long, might add some, and that's my first target.
All right, moving along to those social media names, we have to take a look at Zynga and Facebook. And I think, we all know the Facebook story. It's like CNFB at this point. Forget CNBC. In any event, I still have one from someone. But we have to take a look at Facebook and we have to take a look at Zynga because, these names are just, if you're in the social media space, you're just getting your face ripped off, for lack of a better term. Because you're trading,
your
trading
face
in
ripped
sympathy.
off. Exactly.
This has been a week of like old school trading terms. Your face ripped off, dead cat bounces, red dog reversals. It's been...
It's always fun and interesting. So with this one, Zynga got a lot of people in a lot of trouble that had actually a thesis. I tried it a few times because everyone was saying, oh, Zynga's going to be 18 to 20 by the time, Facebook comes out. P.S. If you listen to them, you broke every trading rule because if you just look at the chart's been gross, it's been ugly, it's given you so many signs. Right here in Charting 101, go to any textbook, you will see outside day, reversal, get out of the way, especially after a move from around $9. But if you said, oh, you know what, Facebook's coming out in a few months, I'm just going to stay with it, this is what you had to go through. One sell signal, then look at this pivot. Once it got engulfed, another sell signal, all the way PS down to as low as this $6 area. So for me, I said, you know what? Now that all the hoopla is out of the way, I'll try it one more time. I have a new point of reference. I bought yesterday around $6.95. My stop will be the $6.36. I think you could add through $7.35. And I'm not looking for a blockbuster trade, but maybe it gets back to 8. So if you could buy it correctly back to 8, that's a nice percentage move. And then maybe, this big downtrend that's been coming into play. If you want to hold it, it starts to break above that. You then can get a move to $10, $11, and some of the fundamentals that people were so excited for, instead of the hype, start to show their face.
So now what are you guys doing with Facebook? Are you guys actually trading this name here?
Yeah, yesterday I got long it. Yesterday it was up like 30 cents pre-market. 30.97 was that low. I said, you know what, first day it's up, first day it's upgraded. First day you're allowed to actually short it, so it'd be pretty ironic that everyone wants to short it now after going from 41 down to 30. So they just started shorting it. They can get squeezed. So I'm long some. I'm not expecting anything huge out of it. If you look here at Facebook, you'll see the chart, absolutely gross. Here's your first green day. So you could be long here versus low. The low here is 30.94. If it trades above yesterday's high, I think some guys will try and add to it. I might be one of those guys too. The high yesterday was what? 32.50. We get above 32.50. This is your next pivot. We talk about pivots. This one is 33.59. And then I do think it's going to hit a brick wall once we get to this gap at around 36. So long some here, and we'll see if we tactically can play it back to 36. If it does go back that way, it'll be good for the market. But if it starts to fail, I am uncommitted. I will be out right here. And I think fundamentally, 26 to 28, but a lot of people are saying that, so typically it doesn't get to where a lot of people say.
All right, let's wrap up this morning call with Mosaic, my 2012 pick. And just like Scott with Google, we expected some Q1, Q2 choppiness, but that doesn't matter. We can still have our long-term thesis because we are able to trade these things intraday. So what are the T3 guys taking a look at here?
Well, yesterday, finally, a lot of guys were chirping, oh, look at the ags. They all made new lows and came back above small buy signals. Okay, but the question is, can it be continued? So with Mosaic, if you look here, and you sold correctly and you wanted to buy yourself back, yesterday it held this long-term area. Look at this long-term support at around 45. It held above this recent pivot, closed pretty strong. You want to take a closer look here. This is definitely not one of my favorite ag stocks. CF has been mine to trade this and that. But here there could be a trade. If you're long here versus 46, it starts getting above this 48.67. You could see a bounce. So if the second half thesis starts to play out, you'll probably see this start acting better. I want to take a quick look at CF because too. Just shows you how even like a favorite stock, you need to have your discipline. Because
remember, the pattern kind of looks the same though.
Yeah, well, from where it came from,
Right.
but it made new highs first. And then me, I'm risk averse, I don't take it into earnings. Remember that pattern here real quick? This is when I was buying it around 188, and then I sold it 195. And then look at this outside day. So even if you love this stock and saw this outside day, it gave you a clue to sell it. Made a new high, closed in the low, sell signal. And then look what followed through after that. And then you had this other pattern where 179 was your out. So you have to really love your story, but then learn how to technically maneuver it based on the chart patterns.
All right, guys. We're going to a holiday weekend. Everyone have a safe, happy weekend. Good luck trading the next 2 days. Don't forget Scott and the rest of the team. We wrap it up for you on Options Profits, Real Money Pro, and T3Live.com.